99% of all energy in trading is spent on trying to figure out how to get into the trade. The right strategy, the right combination of indicators, and the right price. But your strategy is doomed to fail if you don't understand two very important things. The first is that the true art of trading lies in the when and not the how. There are only two types of trades in the world, continuation and reversal. And your success depends on one thing, making sure that you pick the right trade that is in sync with the current market regime. This is true whether you're an absolute novice who doesn't know bid from ask or a mighty quant firm like AQR with more PhDs on staff than the Fermi National Accelerator Lab. Recently, AQR has been slapping itself on the back as its value tilt strategies perform way better in the overall market in 2022, seemingly justifying the huge focus on research and development and statistical analysis. But let's hold up for a minute. Let's pull back a little. Did you know what the AQR style premium alternative fund did between 2010 and 2020? In total, 22.4%. How about the AQR Managed Futures Strategy Fund? 29.3%. And you know what? What did the lowly S&P index do during the same time frame? 191.2%. That means that investors lost 16,880 basis points of opportunity cost over the past decade by giving their money to some of the smartest guys in the room. For all of their very impressive statistical work, the success of AQR products ultimately depended on the luck of the market regime. In 2022, the go-go decades of easy money finally came to an end, and lo and behold, the value strategies worked. Now, I've been trading for more than 20 years, and in that time, I've gained a very good understanding of what makes a good trade. And there are trades that are in sync with the existing market sentiment and initiated at the right times of the day. Let's start with the idea of being in sync with the market sentiment. This means that, if stocks are rallying and investors have a positive outlook, currency pairs are closely correlated with stocks such as Eurodollar, Aussie dollar, Kiwi dollar perform well. If you're trading stocks, and the current market sentiment is, a recovery and a rally of stocks, then your better trades will be in sync with the uptrends, the trades that are looking to buy on dips rather than sell on rallies. And, so if your strategy is telling you to buy in a positive market regime, thumbs up, it looks like a good trade. But if your strategy is telling you to sell, then you may want to reconsider because it could end up being a weak one. Alternatively, if stocks are selling off and investors are nervous or worried, you should be looking to take the setups that involve selling the same pairs that are correlated with stocks. The time of day is also very important. My SIP trades perform best at the market opens, Asia, Europe, and New York, though I only trade the Asia and New York open. My strategy, your strategy, would be doomed to fail if you don't understand when to take trades and when to avoid them. My trading partner, Boris, has traded his strategies tens of thousands of times, and so there's a tremendous amount of samples. So much so that 5-year-olds can figure out the pattern of his results, and it really doesn't take a genius to figure out exactly when it gets in trouble. Almost all of its major losses, which he lovingly refers to as the buzzsaw whipsaw time, are made outside the 6 to 12 New York trading time. If he contained his trading to just those hours, his risk exposure would be considerably smaller, proving that the success of his strategy depends far less on the elegant and complex way that he's programmed the algo to find trends, but much more on just when it trades the market structure. Trading is timing. The when is just as, and in some cases even more important than the how. The second most important aspect of trading is you. Your trading is doomed to fail if you don't control your emotions, your impulsiveness, your fear of losing and missing out, because 90% of traders focus on their systems, indicators, setups, etc. But the truth is that you can have the best system in the world, but you will still be a loser if you can't execute it. The hardest part of trading is finding a good setup. Staying calm when you're executing the good setup. Trading is simple if you follow your trading rules. Take the trade, win, lose, rinse, and repeat. Of course, that involves having a good strategy and risk management, which, we at BK try to teach you. The most dangerous mistake is breaking your trading rules. It gives you regret when you lose, and when you win, it does nothing to reinforce your strategy. Basically, it's a lottery ticket. You want steady, consistent, repeatable success. And to achieve that, you need to learn to be patient and trade your strategy like a robot. You see the setup, take the trade. If you don't don't. I hope you found today's video valuable. If you like it, hit the subscribe button and smash the bell for notifications so you are updated for when the next video occurs.